Hi, good afternoon. You're watching Closing Trades right here on ET Now, and we've picked up after a quiet start actually. A good 93-point move coming in on the index, but the kind of churn that we've seen on a daily basis, that's quite remarkable. Yesterday was banks, today it's commodities once again which are taking the lead. So you've got the likes of Hindalco sitting at a gain of about 2.25%. In fact, it's at the top of the pack right now. JSW Steel giving it company, almost a 2% move. Energy names like BPCL holding up 1.6%. Reliance, not a pure play energy name, but that stock as well has finally participated today. About 1.5% uptick coming in there. For the broader market, I mean, those spots of green continue. The fertilizer pack is holding a buzz. Chambal Fertilizer has put on another 17.5% in trade today. GNFC is holding up 11%. Commodity names like India Cements perked up 7.5%. And then the smaller banks are the ones which are actually taking the lead today. So look at a CUB, RBL, Bandhan. They are the ones where you're seeing a major chunk of the action play by. Having said that, is sitting at, and ICICI Bank as well is holding up about almost 0.5% or so. But Cheryl, what about the buzzers that you're tracking?
Absolutely, a lot of stocks actually buzzing in trade today. No doubt that, like you mentioned, Aisha, the fertilizer pack, the entire fertilizer pack is actually up, seeing a sharp up move in trade today. Be it Coromandel, RCF, you have FACT, all of them are poised at a fresh record high level in today's trading session. In fact, FACT has hit 20% upper circuit as well in today's trading session. Apart from that, you have a couple of names that are buzzing on back of news flows. Take a look at what TANFAC is doing. That one also is buzzing in trade. It has formed it's on back of a news flow of a JV with some chemicals. So on back of that, you have TANFAC that is buzzing in trade today. A short while ago, you had Jupiter Wagons that actually announced that they have bagged an order from Siemens. This is for Vande Bharat train sets. So on back of that, you have Jupiter Wagon that's seeing an up move about 2% or so. Apart from that, take a look at PNB Housing. You had a couple of block deals take place in that particular counter, and on back of that, the stock is down about 5%. RateGain saw a block deal about 1.5% equity change hands. You also have Piramal Enterprises. A short while ago, you had a block deal in Piramal Enterprises as well. Remember, yesterday also you had a sizable block deal in that particular counter. Today as well, there's a block deal of in excess of about 4% or so. Take a look at CE Infosystems of MapMy India. We spoke to the management also through the course of the day, but the reason the stock is buzzing in trade is because Goldman Sachs has come up with a note where they've initiated coverage with a buy rating. They've set a target of about 2,800 rupees per share. And also you have Uno Minda that is buzzing on back of initiation coming in from Goldman Sachs with a target of about 1,350 rupees per share. There is also Tata Tech that is in focus on back of this GS note, but the Goldman Sachs note is an initiation with a sell rating on that particular counter. So on back of that, you have Tata Tech that is under pressure in trade today. So that's the way how the markets are looking like at this point in time. A couple of stocks buzzing based on news flow, but let's bring on board Kunal Bothra as well as Naresh Marani to talk about the markets and where they're headed from here on. A very good afternoon to you, Kunal, as well as Naresh. And Naresh, let me come first to you. Yes, banks are the one that everyone is talking about, be it private sector bank, the large cap, or the mid-tier banks. But what, according to you, is standing out in trade today? Do you think that the smaller banks are playing catch-up today?
So the smaller banks are playing catch up, and majority of these banks have been underperformers. So if you look at a Bandhan Bank, it's still available at June 2020 prices. City Union Bank has gone nowhere for a long period of time. So a lot of these banks catching up is pretty normal. But the main fact is the largest one, which is HDFC Bank, coming back to 1670. Now it's just 35% away from an all-time high. And the stock had gone all the way to 1400. So that's been a solid recovery. Then you look at ICICI Bank, it's just 2%, 1 to 2% away from an all-time high. And it has made those attempts around 1165, 1170 a couple of times. If it sustains 1170, that gets into a fresh momentum. Same way Axis Bank has hit a new all-time high or very close to it. So we are seeing a clear shift. Earlier, it was all about PSU banks outperforming. So whether it was a Can Bank, SBI, etc. But the shift is now towards the private side, even on the financial side. So you have a L&T Finance holding up into a new 52-week high. We've seen a AB Capital hit a new 52-week high. So the focus now seems to be private banks and financials.
Well, yes, it surely is. Kunal, are you also focusing your trades on the banking space like we've been chatting about?
Yeah, I think private sector banking stocks, and good part is that we don't have too many options over there. It's limited towards the large cap private sector banking names. Otherwise, I think the confusion in the conundrum just about increases for traders, especially in the shorter term time frame. And the best part about the stocks on the private sector banking names is there is a follow through price action. So after the 3.5% up move yesterday for many of the private sector banking names, there is a strong follow through for the leader stocks like HDFC Bank, ICICI Bank, etc. And I would believe that that's a very strong and a positive sign that volumes are rising when the stock moves up higher, and then there is a follow through price up move. Netted, I would believe that the action would probably continue with these specific sectors which have either shown signs of strong outperformance or at least they are covering up their huge underperformance, one of them being private sector banking names.
Right, but Naresh, let me come to you on Maruti Suzuki. Well, what exactly is happening on the charts of that particular counter? 6 day of decline coming in for Maruti Suzuki today. It has actually popped up in the price volume breakdown levels as well. So what's your take coming on Maruti Suzuki in particular?
So if you look at the whole auto pack as such seems to be taking a pause. And then if you look at Maruti for the last 2.5 months, there have been at least 4 attempts around the 13,000 mark. The stock could not cross every time. Just say 3-4 sessions back, also the stock came very close to that 12,940 and reversed back. At the same time, on the downside, if you look at it, 12,000 is a support, which is where it bottomed out in April, as well as closer to 11,600, 12,000 was the low on the election day. So out here, till the time it holds 12,000, we would still call it a consolidation. But a fresh momentum starts only about 13,000 levels. So for now, watching out whether it holds that 12,000 mark or not.
That's the take coming in on Maruti. Bunch of other buzzers in trade. Today, of course, it's important to note while Maruti may be doing what it's doing, look at the profit taking in an M&M, in a Hero MotoCorp. Kunal, you don't see this trend getting accelerated, right? I mean, for M&M, which is practically at an all-time high, and so is, I think, Hero MotoCorp, I don't think a 2.5% decline or a 2% decline on M&M in specific is anything meaningful.
No, it's not meaningful enough, Aisha. But then there is, so we look at the sector composition, the sector strength. Autos was one of the first sectors to make a fresh high, I think, from that June 3 highs and then a correction post or the subsequent day. So, that leadership quality is now getting a bit affected. I would not say reversed completely, but yeah, I think there's evidence that, so likes of Tata Motors, you've seen Eicher Motors also going through a mild correction over the last 3 to 5 days. M&M, Hero MotoCorp, these were the leader stocks from the entire auto pack, and they've taken a bit of a backseat. So we can probably assume that maybe the markets are getting more fragmented towards those individual sectors. Like yesterday it was sugar stocks, today it's chemicals as well as fertilizers. So I think because of that, maybe you're seeing some sort of profit booking into these spaces so that the money could be freed and could be traded into these kind of counters. But then we'll have to wait out for any major reversals into these kind of names to try and understand whether there is a sharp U-turn into these sectors. So as of now, they're still trading comfortably above their key support zones. For example, M&M, the stock is still trading much above the 50-day moving average, which at current levels is at 2600 mark. So I think we'll wait out for at least a point where 2700, 2720 gets retested. If that support holds on, then we can assume that it's just a profit booking wave.
Okay, still a trend to be watched out for today. Of course, some of these stocks and actually some of the other buzzers as well. Look at a PFC REC, for instance, as well. They also have been cracking down today. We're going to take a very quick break on that note. When we come back, we'll have Rajesh Kothari as well join in to talk about the fundamentals of the markets.
Welcome back. You're watching Closing Trades on ET Now, and let's take a look at the markets. Yes, we are holding on to that positive territory. The recovery has creeped in, and we are actually sustaining at those levels, be it for the benchmark indices, for Nifty Bank. Even broader markets are actually participating in today's trading session. The advanced decline ratio tilted in the favor of the gainers, but one particular pack that is actually soaring away in trade has to be the fertilizer pack, Naresh. Be it Chambal Fertilizers, be it Fact, be it Deepa Fertilizers, name it, all of them seeing smart up move in trade today. And where do you see them headed from here on? Do you think that this sort of a momentum will sustain? Because there's a lot of news flow also attached to this move for the fertilizer counters.
A tough call to take in the smaller PSU names in the PSU side because the floats are very low. If you look at a Fact, etc., the floats are 1% or lower. So tough to take a call. But if you look at the other side of it, we've been seeing this momentum continue in a Chambal as well as Coromandel. But given that it's already moved up 20-25% in the near term, one could wait out. maybe one could go a little far in the small cap and look at names which have not moved, like a Shri Pushkar Chemicals and Fertilizers. So that could be the only one which is closer to a breakout, or a Zuari, which has not gone into a crazy territory in terms of overbought zone. So these two small caps would still look interesting.
You know, we've been debating since the move in the banking pack yesterday whether that's a pocket one can look at sustainably. And the consensus seems to be that clearly that's the one space, especially the private banks, where you do have valuation comfort. We spoke with a whole host of experts throughout our anniversary. And here's the gist of their calls on not just banks, but financial services as well.
Financials, this center point of the country will pass through financials. And it's not just the banks, the wealth management companies, the mutual funds, the stock markets, enough range of things to play there.
Financial services led by the lending, large lending businesses, and I'll emphasize large because the environment is very favorable for large, not necessarily the small. And capital market businesses, financial services overall, I think is set for a major leg up. It has been lagging the market so far. I think that's where the valuations are looking quite good. And there is a very strong earnings cycle coming.
I may sound contrarian, but I am not very bullish on banks and private sector banks.
You're the first one to say that.
I'm not even bullish on IT. In fact, they are the two most darling.
IT is almost a consensus trade.
No part of lending at all?
See, I prefer the NBFCs.
Yeah,
I
that's what
feel
I
there are
was
pockets in the NBFC space which I'm bullish on, and that's what's there in our portfolio. We are actually a fund that is massively underweight private sector banks.
Okay, let me welcome on board then Rajesh Kothari and find out what he's making of the market right now. Rajesh, hi, afternoon. Let's start off with banks, exactly what our experts were talking about, because seems like that's where valuation comfort is. The FII is clearly making a comeback, and their first port of call is private banks. Do you believe this is going to be a sustainable move?
Well, I think, entire banking and finance, we divide into multiple sub-segments. So we have a private sector banks, then we have a PSU bank, then we have NBFCs, and then there is something called others, which includes insurance, asset management companies, wealth management companies, and exchanges, correct? So what we do is that we look at from growth perspective, each of the bucket, and then within that, of course, each of the companies, and accordingly, construct the portfolio. Coming to private sector banks in particular, I think the growth is, going to be there strong in FY24, particularly second half. In terms of the loan book growth, net interest margin can be a little bit under pressure, but that's true for the entire sector, be it a PSU bank or be it a private sector banks. But I think in last 4 years, the PSU bank's profit growth, because of the lesser credit cost, was significantly higher than private sector banks. I think next 3 years, that gap is not going to be big. In fact, the private sector banks actually can do better than public sector banks in terms of the overall earnings growth, because the bulk of that benefit of credit cost is already behind us. So I think private sector banks should do well from here on. I don't see any reason why they should not do well. Of course, valuations are comfortable. They're already compressed in last 3 years. So there is another positive thing in terms of the margin of safety. So can they deliver 15-18% the profit growth on compounding basis over next 2-3 years? I think that's high possibility.
Talk about the winners then during the COVID era. Definitely it has to be the IT sector, the pharma sector that have been that were the winners then. But from there on, they've actually faded away. The flash on the bottom of the screen that we're seeing is that rupee has hit a fresh record low against the dollar, which should ideally be beneficial for the exporters like IT or pharma sector. But what's your view coming on both of these sectors? Fundamentally, where do you see these sectors headed?
The IT sector, we are still underweight. I think the global IT spending is going to take some more time before we see the, some signs of pickup. But and at the same time, there are many other opportunities in Indian economy which are likely to do very well. Capex is one thing which we have been playing from last almost 4 years. So we are very positive on overall capital expenditure related themes. We are, of course, very bullish on automobiles and auto ancillaries. And consumer discretionary was our favorite from last 4 years. Incrementally, we are even getting positive on little bit on the consumer defensive. So I think these three themes are going to play, if you ask my personal view, going to do much better compared to the other segments, be it IT, be it healthcare, or be it banking. So on a relative basis, I think the auto, capex, and consumer are the top three themes to play, compared to the other sectors.
Right, okay, that's the themes that you're liking right now. But Rajesh, purely on a market cap basis, does it seem like that the focus has now moved to large caps because of the FII participation picking up as well? And maybe we see at least time-wise consolidation, if not correction, when it comes to the mid and small caps.
I think a stock price is a mirror of earnings growth. It is a slave of earnings, irrespective of its market cap. So what is most important is the underlying profits and underlying ROC and of course underlying profit growth. So what we do internally is that instead of looking at market cap, we look at the profit buckets. So if we look at India, out of 5,000 listed companies, there are roughly about 600 companies, only 600 companies, which makes profit in about 90 to 100 crores plus. That's it. There are only 600 companies. And that becomes basically our universe. Now, of course, from the definition perspective, only top 100 is called large cap. It means 82% is actually mid and small cap within that 600 companies. So if you look at our AAA budding beast, which is a mid and small cap PMS offering, often our clients say that probably is only mid and small cap PMS, which does not invest into any small company by profit size, because we invest actually only into leaders, right? So looking at the company from the profit size perspective gives you a lot of different insights rather than just looking at the market cap, number one. And number two, just because company large by market cap, that doesn't necessarily mean that it cannot grow. There are a number of examples, be it a Titan or be it a Trent or many capital goods companies, they're extraordinary returns despite they were large in terms of the market cap. So I think we need to look at profit size and underlying ROCE and of course underlying earnings growth. These three things are critical for stock to deliver returns, irrespective what cap it is wearing.
That's the take coming in on the stocks, the sectors that to watch out for. A lot of stocks that are buzzing in trade today. One of the stock is CE Infosystems of MapMy India. Earlier today, we actually caught up with Rohan Verma, who's the CEO and the executive director at the company, who shared the outlook for the revenue, the margins going forward. And remember that initiation note from Goldman Sachs is definitely perked up the stock. Listen in.
By FY27, FY28, we're looking to cross a milestone of about 1,000 crores in revenue. And if you see the past 3-4 years track record, we've been growing at a CAGR of about 38%. There's a lot of growth opportunities ahead for MapMy India if you look at the areas that we play in, which is maps, IoT, and drones. If you look at the track record, and we've always maintained that, at least in the past, that we're looking at a 40% plus EBITDA margin at the annual level and 30% plus PAT margin. And the focus really is between growth and margins.
With closing trades right here in ET now, the European markets too have started off quite okay actually. The FTSE MIB now staring at a 1% gain, Stock 600 up 0.5%. And you've got the CAC as well, scaling higher by about 0.6, as is the DAX right now, which is up more than 100 points. But there's an important event on Saturday, the GST meeting, and it seems that gaming companies could actually see some relief coming in after the GST meet in relation to the retro tax demand. Simita Karir, my colleague, joins in with what her sources are telling her.
Right, so ahead of the GST Council meeting, the gaming industry is hoping for relief, not on the 28% GST taxation, but on retrospective taxation. That's according to what some sources have told us. In fact, coming to the point on retrospective taxation. Now, these companies are hoping for a key amendment to be made to the CGST Act, as several of them will get a relief from at least 70 tax notices that were served to these gaming companies. Now, how will this relief come in? This relief could come in the form of an amendment that the GST Council agrees upon, amendment to Section 11A of the CGST Act, and this amendment will give government the authority to let go of these retrospective tax notices that were served to these gaming companies. Now, it is pretty much similar to Section 11C of the Excise Act. It will, of course, need an amendment to the GST Act to empower the government to refrain from GST not being levied or from these industry players and gaming players. Now, the industry for long, has been raising this issue of retrospective tax being an industry killer. They've also been arguing that the 28% tax should apply from October 1st, but the government has been contending that the revision was clarified in an existing law. So if done, this could bring in relief to businesses that are navigating the complexities arising out of that the tax regime. But all eyes, of course, on the June 22nd meeting and what the GST Council decides.
That's Sumita, but let me go across to Sumit now, who is joining us to tell us exactly what could likely be under the consideration for the fertilizer sector. We've seen all these fertilizer stocks buzz and trade, most of them at record highs. Sumit, what are we expecting?
Well, upcoming GST meet on June 22 will have a number of issues which will be discussed. One of the issues that is going to have some impact on fertilizer sector and benefits fertilizer overall sector is the GST reduction on this particular issue. Sources have told us that Fitment Committee on GST has recommended this to GOM, Group of Minister on Rationalization, as far as the demand of industry on bringing down GST on fertilizer is concerned. GST on fertilizer is 5%. Industry is demanding of complete scrapping of this, and we know from the sources that Fitment Committee has recommended this to GOM on rationalization. Apart from that, certain clarifications will come on tobacco products, BD, etc. Also, some clarification on retrospective tax issues can also come. This includes online gaming. As far as this is concerned, the 28% levy was there, was imposed in October last year as far as online gaming sector is concerned, but this particular is linked to fertilizer also. So fertilizer demand from the fertilizer industry has been demanding since long time that the 5% GST on the fertilizer should be scrapped, and that now the Fitment Committee has recommended that to the GOM on rationalization of taxes.
Sumit, we leave it at that. In fact, insurance bodies are now rallying behind a critical demand, which is a reduction in GST on health insurance premiums. With the policy renewals dwindling amid rising costs, industry leaders are pressing for a cut from the earlier 18% to now 12%. Senior citizens, particularly impacted by high premiums, stand to benefit most from this proposed adjustment. Anurag Shah, my colleague, joins in with more details on the same.
So before GST Council meeting, now there's a heavy demand from general insurance industry for reduction in GST rates for health insurance premium. Presently, health insurance premium attracts 18% GST, and industry bodies are asking for the reduction on GST because in last 5 years, if we see that health insurance premium has doubled, but number of policies has grown only 10 to 11%, and now insurance bodies are also showing the data that renewals are getting impacted because rising inflation and rise in health insurance premium is impacting the renewals in health insurance policies. So industries is asking for the reduction on GST, and senior citizens are also badly affected due to 18% GST on health insurance policy, because if a senior citizen is paying a 50,000 premium, then around 9 to 10,000 senior citizens are ending up paying for GST only. So there is a strong case put up by various insurance bodies. General Insurance Council has sent a letter to GST Council and FM Nirmala Sitharaman to bring down GST rate from 18% to 12%. They have also pledged that if GST rates are reduced, they will also pass on benefit to policyholder. They will also reduce insurance premium, because what the target of insurance for all is there, set up by regulator IRDA. But still the penetration of insurance is only 1% against the global average of 4%. So to increase the insurance penetration, insurance bodies are requesting GST Council, FM Nirmala Sitharaman to reduce GST rates from 18%.
That Anurag, but let's bring on board Ansh now to tell us which are the stocks that are seeing great volume actions in trade today. Ansh, over to you.
Right, so starting with City Union Bank, as you can see in the chart as well, the stock was taking strong resistance at around that 162 level at the start of May. But today we have seen that the prices have surpassed above that level. Also today's move has been backed with good volume of over 6 times its average trading volume of last 20 sessions, indicating very very strong participation in today's move. In addition to this, the stock has also touched its 6-month high level as well. India Cement will also be in focus as the stock has given a good breakout from its upward sloping trend line, and it has also touched 3-month high level with volume of over 5 times its average session of last 20 sessions. Vedanta is also in focus as the stock was actually stuck within a consolidation pattern from last 9 sessions, and today the stock has given a good breakout from this consolidation with volume of over 2 times its 10 session average volume. Lastly, Navin Fluorine will be in focus as the stock has given a breakout from its downward sloping resistance trend line, which was intact from last 9 months, touching 5-month high level with volumes of over 4 times its 20 session average volume. So these are the breakout stocks based on price volume action. But apart from this breakout stocks, there are high chances of GNFC, Birlasoft, Aditya Birla Capital and PNB getting into ban list for tomorrow. So keep an eye on these stocks.
Looking out for all those breakout candidates, let me also welcome on board Rajat Sharma to talk about what he's making of the market right now. And Rajat, hi, afternoon. Considering you have been bullish on the private sector banking names, I'm sure you're smiling right now.
Yeah, good afternoon. No, actually, I've really not been bullish on private sector banking. The only bank from the private sector space that I have in my portfolio is Federal Bank, and that's because, you know, I've said this before. I've said this before. I'm positive on smaller private sector banks like IDFC First and Federal Bank. What I said was private sector banks, the larger private sector banks, I think HDFC, IndusInd, Axis, last 3 years or so, they've really not delivered any return. So I think what's happening right now that you're seeing the price move the last 2-3 days, these banks playing catch up to public sector banks. HDFC Bank has delivered flat returns in the last 1 year. So barring yesterday and today's move, it's gone nowhere. And that's just been my view that smaller banks will eat into the share of these larger private sector banks. And I think the excitement that you're seeing right now primarily is on account of what happens with this GST because there's some talk about doing away with the 12% GST rate. So a lot of the service-based fee. I was listening to someone just now about show before me about health insurance premiums. I think we guys suffer the most. The guys who distribute mutual funds and other financial products because it's a flat 18% GST slab, and the talk around 12% slab being taken away really means nothing to us. But I think a lot of the excitement in these banking and NBFC stocks is because fertilizers, gaming, and NBFC. So keep an eye on all of these stocks. And I think more than banking, NBFC.
We'll just get back to your line is a bit patchy. We'll try to reconnect that. Before that, Kunal, let me come to you and let's talk about the metal counters. A lot of them seeing actually sharp moves in today. You have the metal index as among the that is the top sectoral gainer as well. Where do you see the likes of NMDC, Vedanta going ahead now?
So many of the stocks today are seeing a price volume breakouts. For example, Vedanta today, I think for the first time in last 3 weeks, from that, from a point when I think the stock had hit 500 levels, had corrected back towards 420 in a matter of few trading sessions, and slowly and steadily the stock had gone through a consolidation. So I think today's move indicates that maybe that time-wise and the price-wise consolidation could be over for Vedanta. That's an interesting name at current levels of 470 approximately. My sense is that this move should take the stock back to that 500 plus mark, which was the previous major high the stock had hit few weeks back. The more interesting stock which has actually come back into the metal fray is Tata Steel, the stock which I think over the last many weeks has been going through a pause literally at this 180 plus mark. I think what we've seen is a stronger change for the stock on the indicator front, which probably gives a sense that we may now see a start of a fresh momentum building up for Tata Steel. I think it's likely to go into ex-dividend in the next couple of days. So maybe that could be, one price adjusted point. But I would believe that 195, 96 levels could be something to watch out for Tata Steel over the very near term.
Okay, that's the take coming in on some of the metal names. Bharat Forge has perked up very nicely. The stock is now sitting at a gain of about almost 5%. In fact, Naresh, auto ancillaries in general have done very well, right? There's Uno Minda as well, which has shot up quite smartly today after one of the brokerages initiated a buy with a target price of 1350 on this one. And then, of course, there's Bharat Forge, not a pure play auto ank anymore. It's got the defense exposure as well. What's your reading on both these charts if you track Uno Minda too?
So both these stocks are in strong uptrends. So if you look at Bharat Forge, it broke out about the 1300 mark, which is where it gapped down on the previous quarterly results. and then has never looked back after that, and it has continued steadily towards now almost 1800 levels. So the trend is still up. It's time to just continue to ride on to the trend. Same is the case with the Uno Minda. The stock for a long period of time was stuck around that 700 mark, broke out, and has just continued. A lot of other auto ancillary names have done well. So the another large name, Samvardhana Motherson, as well as Motherson Sumi Wiring, both have broken out, and there are multiple names which have broken out in this segment. So there are still opportunities. One could look at say a Gabriel India, a Automotive Axles, a Minda Corp. So there are still opportunities, but the trend is set for the whole auto ancillary pack.
All right, actually you had a lot of pre-budget meetings take place. Remember that the new government is preparing for the full budget, and the finance ministry is holding meetings with various participants, and today the finance minister held a meeting with representatives from the financial and the capital markets in order to get their views. My colleague Prakash is here to tell us what was discussed in that meeting. Prakash?
The pre-budget meeting with the representatives of the financial services and the capital market has concluded, and some prominent names who have attended the meeting are Nilesha, PMESE part-time member and the MD Kotak Mahindra AMC, George Alexander, MD Muthoot Finance, Prem Prabhakar, MD and CEO SBI Cap, Atul Kumar Goyal, ex-chairman IBA and MD PNB, and Arun Kohli, India head Morgan Stanley, among others. We spoke to some representatives after the meeting, and we are getting a broader sense that they have suggested Ministry of Finance to continue with the fiscal discipline path along with the inflation targeting. Along with that, the Finance Ministry was also suggested by these representatives to give a special focus to the policy stability along with the transparency in the taxation structure. These representatives have also acknowledged the fact that India has done well amid an extremely volatile world, and all possible steps should be taken to keep up the growth momentum. Along with that, some specific proposals, the recommendations have also been made by the representatives of the NBFCs in order to increase funding for the NBFC sector. It was suggested that SIDBI should be allocated funds to fund NBFCs. Along with that, the process should be initiated to bring down reliance on bank funding. Along with that, some anomalies related to recovery process and exemption in 10% TDS clause should also be corrected. So these are the broader recommendations. Along with that, we also given to understand that issues related to taxation in, structure in the capital market were also raised. Let's see how it pans out and which are those recommendations going to be accepted by the finance ministry. That is something which is very interesting, which is going to be very interesting to see.
Right. In fact, the all-important pre-budget meeting with the financial sector has also concluded, and some key voices have spoken in the suggestions and recommendations made. The FIDC co-chair spoke exclusively with us, outlining the same.
As an industry body for NBFCs, Finance Industry Development Council, we are also going to apply for SRO with RBI now. So what we've suggested is that, recent data and figures have shown that NBFC's credit to GDP has increased to 12.5%. Our lending to MSMEs has grown 3 times more than that of banks. So the sector has grown. On the other hand, there is a concern voiced by RBI that the NBFCs are over-dependent on banks. So they have increased the risk weight also. Fine, that's fine. So as a result, bank funding is coming down. But then what is the alternative? So we've suggested that now if government can do some specific allocation of funds to SIDBI, which can then refinance NBFCs, because SIDBI is anyway funding NBFCs today out of their own funds. So if government can allocate some more funds specifically, then NBFCs will get funding and reliance on bank funding will also go down. Secondly, we said that RBI has harmonized the regulatory framework for NBFCs with that for banks. But that harmonization remains incomplete because when it comes to recovery, today we cannot invoke SARFAESI if the ticket size of loans is below 20 lakhs. So that 20 lakh rider needs to be removed. On the TDS front, every EMI which my non-individual borrower pays to me, he has to deduct a 10% TDS. This exemption is given to banks, financial institutions, even to housing finance companies, but not to NBFCs. So I think that Madam reacted that we can see how these anomalies need to be corrected. Final point was on the factoring. While the government has amended the act and now all NBFCs can do factoring, but still there is a requirement of registering with RBI as NBFC factor. So this is a dual registration. In addition to NBFC registration, we have to seek another registration as NBFC factor. That process itself takes time. So there is a case here that maybe that dual registration should be done away.
So any specific discussion which is with regard to bringing on taxation in order to increase overall consumption in the economy?
Broadly, as I said, one point which I could gather was related to Gift City. There was concern expressed that, a lot of gains which are made are outflow goes out of India. How can we incentivize and ensure that that remains within the country? So some steps were suggested on that.
All right, we have Rajat back with us. And Rajat, let's talk about the real estate sector. Right now, it's actually dethroned the metal index as the top sectoral gainer in trade today. But what's your outlook coming in for the realty sector as a whole? We've seen a month-over-month, we've seen improvement in the registrations, but that is sustainable, do you think?
Yes, no, not just registrations. First of all, I hope my audio is clear now. Not just registrations, if you read about the property price trends across major cities in India, property prices have been on the up move for the last year, 2 years. And, it's natural for a lot of real estate companies for their revenue and even their, PAT margins to swell going forward because it takes a while for everything to take effect on the balance sheet. In fact, I'll first give a disclosure. We've added a company from this sector. It is not exactly a real estate player, but it's an EPC company, engineering, procurement, construction. They take projects for third-party real estate companies. The company is called Vascon Engineering. Again, I'm giving a disclosure. We added a lot of this on Monday. We've added this morning, and we're continuing to add this across client portfolios. And the interesting thing about this company is that it's 54% of its revenue is from third party, making of these engineering and construction works for third party real estate players, and 85% of their order book is government orders. And right now, if you see, their order book has swelled a lot. It's about 2,854 crores. And the interesting thing about the company is that in the last 5 years for a real estate company, it's interesting that they've been constantly reducing their debt. So they've pared their debt. They reduced their debt from about 278 crores in 2018 to 173 crores now. The only worrying thing is, which we've been trying to, find out, talk to the management, write to them, is the fact that a lot of insiders have been selling stake, and the company's promoters who hold 32% of the company have pledged a part of their shareholding. Now, given the way the debt is coming down, I think it's only a matter of time that they take that pledge off. And, since some of the insiders sold their stocks in open market, the share price is already around 20% higher from there. So it's a very interesting stock. We've added this to our portfolio. I'm giving a disclosure on that. Other than that, Prestige Estates is another company that we've looked at, not added that. But yes, I think real estate, it has a long gestation. It takes a while for these companies to, and since about 2008-9 crash, we've not really seen any revival in the real estate cycle. As I said, it has a long gestation. It has very long cycles. So it's an interesting sector to get invested in right now.
Right, bunch of stocks which Rajat is liking right now from within the Realty Pack. Kunal, what is your favorite pick? Considering that now there's an India Bulls real estate as well, which has emerged as a very strong mover.
Anantraj remains to be the top pick. DLF, of course, is the second one which I've been highlighting. Still continue to be bullish on the stock. India Bulls real estate is a very high beta stock. So I think till last week or so, the stock was still struggling at that 139, 140 odd mark. And there was a huge amount of volatility the stock has shown over the last 5-6 months. So my sense is that maybe after today's up move, 15% plus move, you might see the stock actually coming back into a corrective phase. Maybe if it comes back to that 147 odd mark, that could be a very good entry point or a re-entry point for traders who missed out on this rally. But I think there are a plethora of other names. You look at Godrej Properties, the stock has been doing exceptionally well in the last 1 month. In fact, when we did a relative price study for many of the real estate stocks, Godrej Properties apparently in the last 1 or 2 weeks has managed to be one of the stronger names from the real estate pack, even outpacing the returns from DLF in the last 2-3 weeks. So that itself indicates that leadership has changed within the real estate stocks. So maybe these 3 names is where I would keep focusing on: Anantraj, DLF as well as Godrej Properties.
All right, so those are the stocks where Kunal is focusing on, especially when it's the Realty Pack, and Anant Raj and DLF, no doubt that they always are a part of Kunal's list, looks like it. But which are the other themes of the sectors, and what should one look at actually when it comes to investing, Rajat? You've given your stock picks, but there are a couple of sectors out there which one should look out for, and which one do you think is a safe haven right now?
Clearly, technology and pharma are two sectors where we are initiating a lot of buying right now. Technology overall as a sector, I think, has done nothing. There's some kind of perception that Indian companies have not caught up with the whole artificial intelligence, with the whole AI theme, and the stocks. I mean, if you look at how stocks in the US have moved, how Nasdaq has moved, Indian IT sector has completely lagged behind, and pharma is the other one. 2 points I quickly want to make. One is what I was talking about earlier, which is very interesting to, I think Aisha asked me about the private sector banking. And, I've said this before many times on your show, on almost every show in the last 2 years, that in private sector banking, I'm actually negative. Whether you look at HDFC or Axis Bank or IndusInd Bank or Kotak Bank, the last 3 years, they've all been flat. HDFC barring today and yesterday where it moved up some 3%, has been absolutely flat in the last 1 year. And pretty much last 3 years, 2 years, all these banks have gone nowhere. Maybe because, public sector banks have been running up. One stock that I do have in my portfolio is Federal Bank. And I've said that smaller banks, smaller private sector banks have a better opportunity to, eat into the market share of these larger banks. And the point I was making earlier when the audio got disconnected was the fact that, today what you're seeing in banking sector, the way these stocks are moving up, the private sector banks, maybe has something to do with the GST Council meet, because fertilizers, gaming, and NBFCs. And why NBFCs particularly? Because the talk has been to do away with the 15% GST slab and either have a 5% or an 18% or reduce some taxation. And I think not just health insurance premium, as you were talking about earlier, it directly affects our industry, people who are in brokerage, AMC business, asset management, because we pay a flat 18% GST on distribution of mutual funds, on stock sales, brokerage. So a lot of these companies, so you'll see even the banks, the private sector banks, which earn some of their around 25 to 45%, depending on the bank, of their total revenue, other than net interest margin, they earn it from fee-based income. So that's where a lot of the GST component, and again, I'm not going to base my buying decision on this GST meet, but that could be one of the reasons why some of these NBFCs and private sector banks are moving. But yes, to answer Aisha's question from earlier, Federal Bank is a bank that we really like. The bank has done really well in the last 2 months. I've been really happy about that. I've had this bank since pre-COVID days. So, and a lot of my clients have had this since pre-COVID days. So it's been a slow mover, but it's given us very, very good returns over a period of time. And I expect this to keep doing well. So even at this price, I would actually recommend adding more of this.
Right. Okay, Rajat, great to have you on the show. Thanks as always for joining in with your thoughts. In fact, with the sentiment now tilting towards the positive territory, what should one investors look at in order to amplify their returns? Let's hear it out from Rhythm Desai, Ramesh Damani and Purinju Veliath on where is it that they're scouting for opportunities in the current market.
Credit growth will, I think, do 15%. Okay. So that's very easy. I think CapEx will do 15%. Okay. So these two are very easy. As a consequence, I think some improvement in consumption, but consumption will likely lag these two sectors, as it did between 03 and 07. People have forgotten this. You look at consumer staple stocks, they were very poor performers in that cycle. And when we arrived in Feb 2008, they were trading at all-time low on relative valuations. We have not gotten there. Consumer staples will get, there was a pop that happened last Tuesday because everybody thought the election result messaged about populism. I so disagree with that. But consumer staple stocks will continue to underperform because they are unlikely to do this nominal GDP growth.
Leadership is with the PSU stocks, and rather than pointing me out for buying them, which is good. Of course, I enjoy the returns and the results that have happened. I think a large part of the credit goes to the PM's office, the PMO's office, if you will, because they've increased the corporate governance of these companies. For the first time in India, the debate is now over. Everyone, including me, would say, well, we like the PSU stocks and we hope the government privatizes these PSUs so value can be unlocked and the national assets can, generate a return on capital for us. But I think that we are fine with the government holding it now. At least I have no issue with it. I think the government has shown they can extract value and deliver results year on year. And that has been reflected in how the PSU index have done.
Investors should watch agriculture as a space, starting with, inputs, the agrochemicals or seeds, the irrigation, to whatever in that field. Mostly they are small companies, but some of them have potential to become very large companies. So I feel agriculture and rural stocks, if you can classify stocks like that, I'm not sure. It's an area, it's a domain investors should really look for.
Right, and as we come to the end of today's trading session, let's get the BTSD ideas from our charters. Kunal, coming first to you, what are your suggestions?
So I'll go with two differentiated stocks. One of them is Aarti Industries. The stock today breaking past about the 50-day moving average above the 700 plus levels. So would look out for targets of 750, stop loss at 690. And Peninsula Land is the other stock which is confirming a triple top breakout, and this could be a potentially big breakout for the stock over the near term. So would look out for targets in the range of 74, 75, stop loss at 63.
Right, and Naresh, what about your BTSD ideas?
So first would be a buy on L&D Finance, a new 52-week higher, a flag breakout, stop loss at 179, target price of 188. Second would be a buy on City Union Bank, just trying to cross a 3 to 6 month high, stop loss at 163, target price of 170.
With that, I'm going to wind it up right here in the studios, but toss it across to Vinny to sum up all the day's action. Vinny?
So it's been an interesting day, especially when you talk about the metals pack, because that was shining bright. Banks continue to outperform the Nifty. When you look at it today, also 0.7% of gain there. Nifty metal, top sectoral gainer, and Nifty managing to just hold on to gains of 23,582. At one point of time, it went about 23,600, and we've seen a sharp recovery from the day's lowest point for the Nifty. So let's not forget that the Nifty's managed to see a sharp recovery. The benchmark indices there. Let's pull up what the mid and small cap is doing there. The mid cap is also trading, outperforming the benchmark indices, 1% of gains. So mid cap also saw a sharper up move. Small cap holding on to gains of 0.6% as of now in trade. Let's pull up some of these fertilizers, chemical names. So let's pull up something like a PI Industries, Fact, National Fertilizers, all of them trading with very, very strong gains. We have GNFC, Aarti Industries. So that pack, RFC, you can see all of them are doing very well in trade, and most of the data points that are coming in for these agri as well as fertilizers, chemical stocks is on the positive side, keeping them on the uptrend. And do not forget that they had been barred in the last 1 year. So now finally the uptrend seems like it's coming back for these names. Reliance Industries, that's one of the stock performers coming in today, and Reliance Industries up more than 1% in trade. We also had ICICI Bank, HDFC Bank, Kotak Bank, which supported the Nifty 50 today in terms of the pull that came in from was these gains, and supporting Kotak Mahindra Bank up almost 1% in trade. Other than that, let's pull up some of these other names that were buzzing in trade today in the mid and small cap side. When you look at it, the Nifty Midcap names, some of these names were the names like when you look at it was AB Capital, that was surely buzzing away in trade with more than 2% gains. We had even the Realty pack, so Prestige Estate, that was holding on to gains. We had Deepak Nitrite, Bandhan Bank, NMDC seeing good gains, and the smaller banks today like City Union Bank, RBL Bank, they too were making the list today. So yes, the banking side, last couple of trading sessions, we have seen that the banks have managed to see good performance there. NMDC also continues to be in focus. Some update that came in on the iron ore front, and NMDC saw gains of almost 4%. We had a brokerage note that kept a very positive target on NMDC, keeping an eye out on that. Let's not forget those insurance names like SBI Life, that was also a one in focus. Today we had Macquarie that came out with a note on insurance as well as the banking side, a positive side for insurance and banking. NBFCs, they said, was a bit of a subduedness that they were expecting on the NBFC front, so not much of an excitement there. Advance decline ratio today clearly in the favor of advances versus decline, so keeping an eye out on that. Look at the losers today in trade, right? We have the Nifty Pharma, which is not doing well. So when you see on the charts as well, Cipla, Sun Pharma not doing well, not holding on to any gains at the end of the day as well. And Nifty Pharma will be closing with cuts of almost 0.4% in a trade. Other than that, let's pull up some of these FMCG names of what we are seeing for something like an HUL, Britannia. Where will they be closing the day? HUL just 1% of gains that we are seeing for HUL, but yes, nothing exciting there on the FMCG front. But all in all, we'll be closing the day on the positive side, recovery from the day's lowest point, and banks continues to shine.